All right, let's talk about one of the deductions that came with the new tax bill, the no tax on tips. Now, if you have clients that work for restaurants, salons, hospitality, any of those tip industries, they're going to be asking you about this. So let's break down what you need to know to handle these conversations like the advisor that you are. Hi, Tax Pros. My name is Nadia Rodriguez, and I am a CPA based out of Dallas, Texas, and this is your Tax Tip Tuesday. So here's the deal. For the years 2025 through 2028, taxpayers can receive up to $25,000 of a tax deduction for qualified tip income. There are some requirements that must be met in order to receive this deduction. First, the industry must be one that customarily received tips before 2025. And those tips, they have to be voluntary. Can't be those service charges that are mandatory. Those don't qualify. And the taxpayer, they need to have a valid Social Security number and one that is authorized to work. Now, if they're married, they have to file a joint return in order to receive this type of deduction. Now, here's where it gets interesting, and this is where your skills as an advisor come through. Those tips, they have to be first reported through a W-2, a 1099-K, 1099 miscellaneous, or a 1099 NEC. If your client is receiving tips as cash or Zelle payments, those tips don't go through a payment processor, so they won't be listed on a Form 1099-K. And as a result, they don't qualify for the tip deduction, even though they're going to be properly reported as tip income. Now, I know your clients are going to probably ask you, should I now start receiving tips only through credit card payments? Now, this is not a quick answer that you can give them during tax prep time. Instead, this is an advisory conversation. As a tax advisor, this is what you're going to walk them through. What is their effective tax rate? How much are they receiving in annual tip income during the year? Is it close to the $25,000 or is it less? What about those credit card processing fees? Is the return on investment there? So here's your action plan. First, identify those clients that are in the tipped industry. Second, make those phone calls because this kind of conversation cannot be really done during a tax prep interview. And third, create a spreadsheet where you can estimate the tax savings versus the credit card processing fees. This is how you will help your client visualize the tax savings so that they can make that informed decision. And remember, this is where you move from tax prep over to a real strategy. And that is where the real value is. And this was Tax Tip Tuesday, brought to you by Intuit Accountants, helping tax professionals stay informed and prepared.